So, hello everyone. Welcome to the Dr. Inia Adesina show, where I share resources to help SMEs thrive. Today, I have another interesting short topic, and again, thank you for everyone that's watched. I want to be, polite and just thank everybody, just not jump in. So, yes, so thank you for everyone that has watched and has commented or complimented. Really appreciate that. So, today, I have another interesting topic. And the topic today is how to fund your business personally, right? I'm going to break it down. How to fund your business personally, how to correctly fund your business, right? If you're using personal funds. So I just say personally, generally, that's what I'm going to use, but I'm going to break it down. A lot of times, businesses start up and they don't really have a lot of money. And even maybe they're not even started, they've been there for a couple of years or beginning, let's say, not let's say startup would be something that maybe a couple of months in, but there are sometimes businesses, let's say the first year, they are still trying to, it depends, like sometimes even software companies, or it depends on the company, sometimes it takes some time, right, to get revenue, right, to get income. So but how are you going to spend and pay for the expenses, right? A lot of people put their personal funds there, right? I know that there's one of my shows I talked about, getting capital and all those good stuff, which very good. I'm not saying that there's anything wrong with that, but in this case, I'm talking about um, when you're funding the business. Sometimes a lot of people have savings and they say, okay, I want to use this to fund the business to just make it, just get it going, right? Because a startup might be for a couple of months, but sometimes the startup might really extend, right, for a couple more months for it to just get, situated, right? So, how do you really do it correctly? And a lot of people, I mean, there's nothing wrong. I mean, I know that some people, I mean, I've seen people that just pay business expenses from their personal account. I see things like that. I mean, my professional career as a CPA and working with a lot of clients, I see people like that, and I get it. There's no money in the account, right? But that's not the best way to do that, right? For example, let me set an example that, I like using practical examples. Say you went for a business meeting. I think I've used this example similar to this, but let's see that you've not watched any of my programs, but I believe I've said this somewhere. Maybe I was, you know, providing examples somewhere when I was presenting, but let's look at it. You go for a business meeting. You go for a business meeting and you swipe, let's say, yeah, you go and you talk about business and you swipe your card, your personal card. Yeah, it's a business meeting. Yeah, we know because you have everything. Maybe you're getting a new client, or maybe you're trying to market to a company. Yeah, we get that. But you're using your business card, sorry, your personal card, right? Now, let's look at this. That same card, you go out with your family. You go and have, a meal, dinner with your family, and you swipe that same card, right? How will I, let's say, okay, I know you might say you document it, but let's make it, let's look at the practical aspect of it. How will I know that this meal is for the family and this is for business when everything goes into the personal, you're spending from your personal account? So how do you do that correct? What do you do? You say, yes, but my business doesn't have any money. I understand that. I understand that you're growing, is a new business. But the best way to do this is to make sure that you issue your company a check, or you do a transfer from your account and have it in the business. And everything you're spending in that business, from that business account, of course, will be business. Now, I can say that, oh yeah, I start the business, that's meals. Business account, that's where when I go for meals with my client, that's where what I use, right? When I go for meals with my family, I use my personal card. So don't get so caught up that your business doesn't have money right now. It's how to structure it. Now you might say, okay, would that money be given back to me? Is that money something that will be given back to me? It just depends how you structure it. I know some people might say, but it's my business. I know it's hard to wrap your mind around it, and I get it. But this is how it's when you form an entity, right? Right? That entity is separate from you as an individual. Of course, there are exceptions. We know we don't want. I don't want to go into exceptions where maybe it's a fraud. You're committing fraud and all those stuff. But I'm not talking about that because I know I'm talking about talking to fantastic people. So I'm not gonna. But there are exceptions. So not to there are exceptions. All right. So you ask yourself, oh, but will I get this money back from my business? And I will say it depends. Why does it depend? It depends on how you structure that. How do you structure that money you gave to your business? Now, if you structure it as a loan, definitely you get the money back. How do you structure it as a loan? I know, again, it's hard for you to wrap your mind around this sometimes. I mean, but remember, your business and you as an individual, you're different. You're two different people, right? The business is a different sort of person, really. Even though you own the business, sometimes 100%, maybe you're not a partnership, 100%. But you have to write an agreement between the business and yourself and say, okay, this is the terms of the agreement. I'm giving the business this amount of money. At the end of the day, this money will be paid to me, and of course, as an accountant, we know how to put that in the books. We know how to do that in the financial statements. It will be a loan. We'll say it's a loan from the shareholder or from the owner. We know how to do that. And then that is on the book. So that anytime it happens that you want to pay, the company has enough money or has money, because it will be an agreement between the company and yourself. So that is when it's being paid back. But some people say, you know what, it's capital. I want to have it as equity into the bank, into my company. And that's fine also. It just depends, right, on how you want that to be set up. But the main thing I'm telling you here is, how do you do it in such a way that is correct? Talking about the whether you choose to be, is a loan, you choose for it to be an equity payment, that's fine. That's not where I'm going, right? That's fine. But I'm just talking about structuring in such a way that if you want to spend money for your business and you're actually giving the business money to spend, whether it's a loan or it's equity, make sure that you are transferring that money or writing a check to the business account, and then it's from the business account that money will be spent out of. All right. The government does not like, mixing. They don't like mixing things up, personal and business. They call it commingling. They don't like, sometimes we look at it and say, oh, why is the government, why are they being so strict? Right? Well, you might look at it that way, but do you remember the example I just gave? How do you know that if something is business or if it's personal, right? How do you defend that, right? Are you going to bring all the receipts and look at all your notes? No, it's difficult to do that. So to make it, the government will say business, spend from the business account. Also, flip side, let's say you want to withdraw money, and that's why I said let there be a paper trail. You paid money into the account and said, I'm paying money from, let's say, Mr. Jack's account, Mr. Jack and Jill, or they have a business called Jack, or let's say Jack has a business called Jack, right? The Jack pays money, transferred money into Jack's business, right? Now, let's say the money was, even if it's 100,000, it could be 20, it could be 10, whatever it is. Now, there comes a time that Jack Company makes money, right? So if Jack Company decides, okay, I'm making money based on the agreement, and Jack Company is really making money now. So Jack Company can issue a check or transfer money from Jack Company, okay, to Jack's personal account, and repayment if it was a loan, right? Remember, that transfer is not taxable because it's a loan, right? Of course, if Jack charged interest to the company, that interest income is taxable to Jack, and interest expense is deductible to Jack's company, right? His interest is like, think about it, credit card interest, or think of it like that. All right. So the main reason I'm saying I'm really wanting to put this out there is because, I talked about commingling funds before, and a lot of people, I get it, businesses, they're startups, they're trying, or maybe they're not, again, they might not be startups like three, they might be they're waiting, they're anticipating, because a startup, it depends. Sometimes the startups that, they say it depends on the number of months. You might say something is a startup, but I guess it really depends on I know it depends on the industry. Some businesses stay for some months or so, even over a year before they make revenue. Some business even over 2 years. But what I'm really trying to say here is that we should make sure that you should make sure any company, if you're not only a startup, but if you're funding your business, make sure you might fund. It's possible. Maybe there's a big project. Let's say the business is not even a startup. There's a big project that is on ground, and you really want to take advantage of this, and you have some money aside, kept aside. You just have some money in your savings, and you say, "Oh, you know what? I want this to happen." So what do? What you should do. What the best way, the right thing to do is transfer that money to the business account, and of course, if it's a loan, there's an agreement between your company and yourself that this is a loan, because documentation is very, very important, because down the line anything happens, the documentation is there. All right, so just wanted to let people know that, because I've had this question before and said, oh, we're just starting up, this business doesn't really have money, and I get it, but do it in the proper way. You have to do it correctly, so that yes, your business deductions will be deducted. Like, we want to make sure that there's no mix, and then you can defend the position, and it's easier to defend, right? When you move money, your business, your money from your personal to your business and spend out of your business. And of course, you have to be, really spending business expenses from your business account, okay? But the reason why I'm saying this is because a lot of people actually spend from their personal account, business expenses from their personal account, and at the end of the day, it's very difficult to defend that. All right, it's very difficult, and I know sometimes here and there things happen. If you happen by maybe a couple of transactions, right? And make sure that there's an accountable plan. And I'm not going to go into the accountable plan, right? Because it's it depends on so many terms. And an accountable plan is a plan that actually walks you through on how to is a plan within the company that actually puts forth guidelines on how to get reimbursement. But it depends on so many factors. I'm not going to go into that. If you want to hear more, of course, you can reach out to my practice. All right. So I just wanted to share that with you, because I know this has been, it's a natural, it's not an abnormal question, right? It's not, but it's the best thing to do in this process, in this way, is to make sure you do it correctly. Make sure you're actually doing it correctly, so that you can make sure you're maximizing the deduction. Because imagine you spending so much for the business, and the Internal Revenue Service or any tax authority says, no, this is not business, because you're spending everything from the personal account. And I'm telling you that it happens, right? So knowing is important, but of course, I will stress this is for informative and educative purposes only. Of course, if you want to know more, if you want us to, dig further into your business, as in, directly into your business, of course, reach out to my practice if you are not working with a firm. Now, if you want to reach my practice, that's it. Go to drinia.com, just like it's there on the screen there, and navigate and just book an appointment with my CPA firm, because that's where I do the consulting. All right. Okay. Take care. And of course, as I always say, that to survive, to thrive, you must be intentional. All right. See you next time. Bye for now. And of course, thanks for being here. Bye for now.